The tax filing deadline is just a week away now, and now Paul is joined by Jonathan Scales with Adviant to take a look at what you can do to buy more time if you need it and save money into next year. Good morning, guys.
Good morning. And Jonathan, we do have a couple of extra days this year, so we have until the 18th. But if you don't think you're going to be ready by the 18th to file your taxes, what can you do?
Well, you can extend until October 17th. By filing Form 4868, but that doesn't extend the time that you have to actually pay your taxes. You still have to pay your taxes on the 15th, and actually when you extend on the 18th, you'll have to pay with that as well.
So if you owe, you need to pay. It's just a matter of filing the paperwork. You get an extension on that.
That's correct. You'll pay with the extension, and then you'll be extended to file until the middle of October.
Okay, and I bet many people don't realize that this year with the Social Security Trust Fund, if you're making up to $106,000, your rate will temporarily drop from 6.2% to 4.2%. So you're going to get a little bit more in your paycheck, but should you keep that in your paycheck or do something else with it?
Well, with the American Recovery and Reinvestment Act, it reduced the Social Security rate from 6.2% to 4.2%, and that gives us maybe a couple $100 to a couple $1,000 in our pay extra. We're used to paying that already. So if you're used to paying it, you're used to having it out of your paycheck, use it maybe to pay down debt. Use it maybe to put some extra toward your mortgage. Anything you put extra toward your mortgage goes directly to principal, and that can actually take the time off your mortgage, take a few years off your mortgage.
Okay, and into the future, into next year, as you're planning for next year and health care, with health care reform on the horizon or taking place as we speak right now, should you be investing in flexible spending, or should you be switching over to a healthcare savings account next year?
Well, your flexible spending account and your healthcare savings account are offered many times through your employer.
Right.
You can use a flexible spending account to pay for healthcare expenses with pre-tax money. Same thing with a health savings account. The difference between the two is that with a health savings account, that account balance is always yours. You can take it from employer to employer. With a flexible spending account, if you don't use it by the end of the year, you lose that money and it goes back to the employer. So employees, when they think about a flexible spending account or a health savings account, most times that comes in January when you go through annual enrollment. I'd evaluate between the two which would make best sense.
It might make more sense to go to the HSA then down the road.
Possibly.
It might. All right, Jonathan, thank you very much for getting up early and joining us today. Appreciate it.
You bet.
And good luck to the rest of you if you still haven't filed your taxes. Sarah?
Yeah, get on it. Time now.